we have 55 minutes good to go around the world of business. This is Business Incorporated, and here's what we have prepared for you. The International Monetary Fund is warning Ethiopia about debt restructuring. In Ghana, the producer price inflation is down to 5.9%, and that's the lowest since November 2023. There's a national digital token in Kenya. We'll get the details during the program. You're welcome to the program. I'm Ini John Mekwa, and of course, this is Business Incorporated. We start from the global space as usual. Oil prices rose in early trade today, reversing the previous session's losses, buoyed by stronger than expected economic data from the world's top oil consumers, and signs of easing trade tensions also fed into that. Looking at the numbers for this afternoon, 27 cents has been added to Brent to bring it up to $68.79 a barrel. That's 0.39%. WTI is also in the green, 0.47% at $66.69 a barrel. And U.S. crude inventories fell by 3.9 million barrels to 422.2 million barrels last week, according to the Energy International information, and a steeper decline than forecast for 552,000 barrels draw, suggesting stronger refinery activity, tighter supply, and increased demand from China. Data shows growth slowed in the second quarter, but not as much as previously feared, in part because of front-loading to beat that U.S. tariff before it started, and that eased fears over the state of the world's largest crude importers economy. The data also shows that China's June crude oil throughput was up 8.5% from a year ago, implying that there's stronger fuel demand. We move to the metal space. Gold prices dipped on Thursday, pressured by a firmer dollar and easing market tensions after U.S. President Donald Trump said it was highly unlikely that he would dismiss Federal Reserve Chair Jerome Powell. And so looking at the numbers, we see, so Jerome Powell can, have a little bit of relief, even if it's just for a short time. So spot gold is down 0.2% to $3,340.79. U.S. gold is also down almost 0.5% to $3,347.10. Spot silver down 0.1% to $37.98. Platinum takes another side and is in the green, 0.2%, $1,419.67, while palladium is in the red, 0.1% at $1,230.14. We know that the dollar index edged 0.1% higher. That, of course, makes metals more expensive. That's why we see that it seems the demand has gone down. However, Trump has said that he's not planning to fire Powell and kept the door open to the possibility and renewed his criticism of the central bank's chief for not lowering interest rates. As we know that the U.S. Inflation CPI came out 2 days ago and it was higher than expected, so it doesn't seem that there's going to be a cut in the nearest future. And talking about inflation, we come here to Nigeria. We also saw inflation numbers from Nigeria ease. And of course, earlier today during Business Morning, Ladi Williams had a conversation with the Chief Executive Officer of Financial Derivatives Company on reactions and probably the drivers of it.
Because core inflation has increased, because food inflation has increased, because month-on-month inflation has increased, it tells you something that the structural defects, structural rigidities in the economy still remain. So what you're having is some transient movements. But if you have had transient movement for 3 months consecutively, it means that the trend is actually becoming your friend. So that's what you normally say in investment. So having said that, what are the inflation expectations? Inflation expectations are more important than historical inflation. The expectations are that, generally speaking, that the price of petrol is going to decline because Dangote is doing all that it can to achieve uniform pricing across the country. The expectations are that the exchange rate is stabilizing, even though it's appreciating against a falling dollar, but the fears of a massive devaluation are no longer there. Also, there's every indication to show that the Central Bank of Nigeria is trying to contain money supply growth. With these three factors put together, one should have no doubt about the fact that inflation is likely to be moderating. Having said that, we have to bear in mind something also, that this is the planting season, right? And we are going towards the harvest as it comes along. At that point, the price of foodstuff begins to come down. But we are seeing some indications, some very frightening indications. Bag of rice, which had gone down all the way to about 75,000, is now back up to 87,000 naira and is likely to head towards 90,000. Beans is up by about almost 6.25% to 85,000. And strangely, we are seeing tomatoes also moving in that direction. So we are not out of the woods, but definitely we are not going to be suffering from major inflationary bouts as was earlier feared.
So Nigeria is not out of the woods yet, even though we see inflation number easing. The reality out there, remember, the numbers are historical, so they are backwards. So by the time we get the numbers for this month, that will be by next month, and we always have to deal with that. Anyways, there's going to be the MPC meeting, which begins on Monday, and then we get the decision on Tuesday. We'll see how much influence this is. I think we've had like 3 reduction in inflation numbers now. We'll see how much that will influence the decision of the MPC when the meeting begins on Monday. And of course, here on Channels Television, we'll certainly bring you all the stories and the live conversations, both at the MPC and right here in the studio. That would be on Tuesday, and you don't want to miss that. Away from that, 867 mining licenses were issued by the federal government in the first quarter of this year, resulting in 6.95 billion naira in revenue generated within the period. This is according to the Minister of Solid Minerals Development, Mr. Dele Alake. He made this known at the opening ceremony of the 4th African Natural Resources and Energy Investment Summit. I was at the presidential villa. According to Dr. Alake, the mining cadastral office received over 10,000 title applications within the 3 periods. They processed 955 and approved 867 mining titles, which included 512 exploration licenses, 295 small-scale mining licenses, and 60 quarry licenses, as well as 5 large-scale mining licenses. Still staying with the federal government, it's targeting to increase the country's electricity supply from the current output of about 5,500 megawatts to 8,500 megawatts within the next 12 to 18 months. The Director General of the Bureau of Public Enterprise, Ayodeji Gbeleyin, stated this in Abuja during a senior leadership team retreat for top management members of the newly established Nigerian Independent System Operator. He highlights that the move is part of efforts to stabilize and expand Nigeria's power infrastructure. The BPE DG also tasks NISO to take the lead in improving grid management, system reliability, and operational efficiency to deliver on the targets. We're still with the federal government, where it's set to boost local fish production and reduce its reliance on imports. According to the Minister of Marine and Blue Economy, Adegboyega Oyetola, speaking at a high-level consultative meeting with fisheries cooperative groups, the minister outlined a bold vision aimed at transforming the nation's aquaculture sector into a powerhouse of food security, employment, and export competitiveness. He explains that Nigeria spends approximately $1.2 billion annually on fish imports. But now, with the right investments and initiatives, as the government seeks to save around $1.5 billion annually from that. Lagos Chamber of Commerce and Industry has hosted its highly anticipated mid-year economic outlook for 2025, bringing together key stakeholders, business leaders, and economic experts to deliberate on the nation's economic trajectory. The event, which was held in Lagos, Nigeria's commercial capital, served as a critical platform for assessing the country's economic performance in the first half of the year and project trends for the second part of 2025.
an Outlook conference for the Lagos Chamber of Commerce and Industry. It allows reflections on developments in the first half of the year, scrutinizing of macroeconomic policies and business trends, and outline practical recommendations for a more resilient and inclusive economy.
We must approach the remainder of this year with renewed resolve, strategic focus, and collaborative spirit. The transforming our economy is a shared responsibility. Government, business, civil society, and development partners must align their efforts towards common goals. We must move from policy rhetoric to implementation, from isolated efforts in silos to integrated strategies, from short-term fixes to long-term planning. And happily, the tax environment has provided that space for significant capacity for long-term planning around anything that has to do with tax.
Tax reformation will be prominent in the second half as the country prepares for implementation of the new tax laws in January 2026.
We are working on implementing that provision of the law. Part of what we have in mind is to set up call centers. In the law, there's a provision that says they must dispense with issues within 14 days. So if you have an issue and you report it, of course, if someone is trying to close down your business because they're trying to collect illegal taxes, they will deal with that immediately. But in very complicated scenarios, we say not more than 14 days. So the structure will be created to make that happen, because that's when people feel the real impact. But it has to be that those people are aware. Otherwise, if you're not aware, you won't know how to escalate. So all in all, we want to try and redefine how we do business in Nigeria. We want to redefine the role of government efficiency, and how that stimulates economic activities for the benefit of all of us.
While there is high anticipation in the new tax law, there are still concerns on increased energy costs, regulatory uncertainty, limited credit access, and infrastructural deficiencies.
And yes, the face of tax there, Mr. Taiwo Oyedele, because tax will obviously dominates conversations in the second half. And so FIRS has started that conversation by holding clinics to educate those who were directly impacted by the new law, the new tax law. And we captured one of those events. Ahead of the implementation of the new tax law, the Federal Inland Revenue Service is organizing a tax clinic with the theme, Tax Clinic for Tax Clarity. The organizers say this initiative is designed to provide small businesses, entrepreneurs, and informal sector taxpayers with essential knowledge on education, compliance, strategic management, and access to key government and professional services.
Importantly, this tax clinic embodies our evolving philosophy at FIRS, a shift from mere enforcement to proactive engagement, from complex bureaucracy to simplified service delivery. It is part of our broader reform agenda to make the tax administration smarter, more digital, more inclusive, and more aligned with the everyday realities of Nigerians.
The manufacturers are here, and their concern is creating an efficient tax system.
In our country, over 95% of businesses are micro, small, and medium enterprises, and nearly 90% of them operate informally. Less than 20% of our 238 million people are active on the tax roll. With this backdrop, the central question should remain, how can tax administration be leveraged to convert the nation's vast economy and the economic potentials into reliable tax revenue most effectively and efficiently?
As the countdown to January 2026 continues, FIRS says Nigeria should expect more of such.
Well, this is the beginning of it all, and we're going to hold this in other parts of the country, because this is just like I said, the median edition. It's going to hold in all the geopolitical, zones of the country, are also going to trickle it down to the states.
On 26 June 2025, President Bola Tinubu granted assent to the landmark tax reform bill. The race now is to get the private sector and indeed all Nigerians ready for its workings. And now billionaire Femi Otedola has announced on his X handle that he's announcing the forthcoming release of his new book, and it's titled Making It Big. He said it's going to be launched on August 18th, and the lessons, setbacks, and triumphs that have shaped his path are almost ready for you, he says. And he says in the pages of this book, he has shared real stories, moments of doubts, breakthroughs, and principles that have guided him through it all. And he looks forward to the opening conversation with entrepreneurs and visionaries across the world, and to seeing how those experiences that he would share might inspire your own journey. That's from Mr. Femi Otedola announcing that his book will be released August 18th, and asking you to look forward to that. Now let's head to the commodity space, and today we are discussing rubber, which is a primary product formerly leading non-oil exports for Nigeria, but we know that that has since been overtaken. It's now widely used in the production of tires, roofing membranes, industrial belts, to mention but a few. According to Economic Intelligence Unit in its recent report, the global price of natural rubber has declined by 8.64% year on year. To date, it's now about $1,854 for a ton, and it's likely to decline even further. Why do we have this decline? Even though it should be good news, let's find out more and the impact of what to expect with Ajibola Ayodeji, is an analyst with financial derivatives company. Ajibola, it's always good to hear that the price of a commodity is declining, but I know there are many stories surrounding it which may not necessarily make it good news.
Okay, good afternoon, Hini. Thanks for having me. So that's true. We've been seeing a decline in the price of rubber, and this is expected to even continue to the end of 2025 through 2026, but an upward reversal in 2027, according to EIU. And I will just mention two factors that has contributed to this decline that we are seeing in the price of rubber, and one is the decreased demand. We know that China is the largest consumer of rubber, because of the slowdown in their economic growth, especially in the manufacturing and their automotive sector. We are seeing a decline in demand for rubber, which has affected the price. That's one. And secondly is that it was announced that two major companies, or many major companies, some major companies in Germany and Poland are closing down. These companies are involved in the production of tire, so they are closing down their plants. This also affected the demand, which has brought down the decline in the price of rubber. So for Nigeria, we are going to be seeing a decline in the revenue for the government, and a tighter margin for rubber farmer, and most especially is that this may lead to a worsening scenario for the already underutilized existing plantation for Nigerian farmers, or for Nigeria as a whole. So, however, this should serve as a wake-up call for Nigeria to scale up the value chain, that is, rather than just exporting the raw materials, government can invest in local processing facility or local processing capacity, which will bring about production of both semi-finished good and finished good, which will help in as a succor against the price volatility that we are seeing, and it will help in improving the export earning for Nigeria.
And I'm glad that you mentioned the issue of the value chain. I wonder if there are conversations about adding value, because as you rightly noted, this reduction in price will most likely lead to a reduction in revenue for the farmers, for the government. But one way to cover up for that will be adding value. I wonder if there are conversations along that line.
Yes, there's what we call forward integration. And what does this mean? It means shifting focus from raw materials into processing, manufacturing, and even distribution of goods. And if this thing is put in place, if forward integration is put in place, it will not only help in serving as a buffer against the price volatility that we are experiencing, it will also help local investors or local farmers. It will help them in tapping into the vast Nigeria consumer market, and this could also help in selling goods or providing this intermediate goods to regional countries, leveraging the African continental free trade. That's one. Another one is this could also serve as a potential for import substitution, especially for the construction and the automotive sector in Nigeria, which will help Nigeria in even reducing the pressure on forest reserve.
Talking about tires, we know that some producers have exited Nigeria. Do we have any hope? Maybe are those multinationals coming back? Are we having local manufacturers of tire?
Yes, there is hope if we put some things in place. And one of the things that I will advise us to do is to copy or to cite example from what Côte d'Ivoire did. One of the things they did was that they support farmers, because rubber itself is a labor-intensive outlet, is very labor intensive. So there is need for us to support farmer and to encourage them by protecting or putting policies in place that will protect them. That is one, and that we help in ease of doing business in Nigeria. Another one is that looking at Côte d'Ivoire, also the 75% of what they produce is processed locally before they export it, which increase their revenue. So we can also look into that by investing in local production of this rubber into both semi-finished good or finished good. That's another thing. And lastly, I would like to say that Nigeria can also invest in power, which is one of the things that is affecting Nigeria up to date. We can invest in power and road transport to help. I believe if we put this in place with other things, I believe we should be able to attract investment in this sector.
Talking about power, everybody needs power, you know, not just those in the rubber manufacturers, even residential. We all need power. And of course, we look forward to a day when we will have such conversations. But thank you so much, Ajibola Ayodeji, analyst with Financial Derivatives Company.
Thank you. Thanks for having me.
Great. Let's take a break now. When we come back, the NGX still on fire. I wonder what kind of fire? Anita will have the details right after the break. Please stay with us. Welcome back. It's still Business Incorporated here on Channels Television. We head to the markets now for intraday numbers with Anita Edit. Anita, I believe you come with more good news. We're just flying in the domestic market. Beautiful one we're looking at.
Well, Ini, what I'm really surprised about is that this is just the half of July, and it appears that the market keeps making everyday milestones. Just last week, we were talking about 120. From 120
now we're talking about, I think, 130. We're heading to 130.
Almost 130 at the corridors of 130. And that's barely 24 hours after it crossed into the 128,000 points, which jumped all the way from 126,000 points, which it closed on Monday.
Yeah, so it's good to have some good news, Anita. So exactly. let's just celebrate it.
And people are making money.
And let investors make their money.
Exactly. I just wish I was an investor.
Right.
So, but I'll just keep it on the side of being a financial market journalist. Okay, so now take a look at the board here. Nigeria's stock market is still, like I mentioned yesterday, and will still continue to say it, Nigeria's stock market is the best performing stock market on the African continent. At least for now, we're not able to tell if it's the best performing stock market around the world. But as far as Africa is concerned, the domestic stock market, the local bourse, is the best performing stock market. This figure, we haven't seen this figure ever in the history of the stock exchange since it was established sometime in the early 60s, 1961. But so far, the market has been able to climb up to about 129,716. 0.25, that's the last track, up by 1.36%. That's so far the year to date has increased to about 25.30%, almost matching what the market ended the year 2024 just last year. And then month to date is up 7.5%. So the month of June
is no more the best month so far for the market. The month of May is also not the best. Just as we look at it, the middle of July is at the moment the best so far for the market, and the financials were the ones to do it, particularly the shares of First Holdco, and we have that. That's because the chairman of First Holdco, Mr. Billionaire investor there, Mr. Femi Ochadola, has increased his stake in the tier 1 financial institution to around 40%, and the market is reacting positively to that news. Yesterday, we saw the banking counter up by 7.1%, and then the market closed. The general index was up by 1.80%. So we see massive gains, trillions of naira in value being added to the market's total valuation. Now, it's a similar picture for the Johannesburg Stock Exchange, 0.22% at intraday. 97,000 has been able to cross back into the 97,000 points and still climbing up, almost following Nigeria's stock market. But now let's talk about the other two markets within the African continent. It's also a green picture for the close of Wednesday's trading session for the Nairobi Stock Exchange All-Share Index, which is also doing pretty well, not too bad. And the EGX 30 has been able to come into the positive terrain, 33,834.21, up by 1.08% at intraday. So far, the African markets are really revving in the green, and they're poised for a positive close for Thursday's trading session, and most likely into the end of the second trading week of July. So that's a snap for the markets. And now we take another step into the fixed income market. But this time we're looking at, yesterday we saw the Nigerian Bureau of Statistics releasing the much-awaited June inflation report. Inflation is one of the key indicators that all the markets around the world take a cue from, because that's one of the factors that is being used to gauge the country's performance and take monetary policy decisions by central banks across the world. So Nigeria's economy is no exception, and that's, of course, is one of the expectations that we had for the market yesterday, which came in at about 2.222%. That's against that's the inflation number for the month of June, while that was about 0.75% drop when compared to the amount, the 22.97% inflation reading for the month of May. And now to give us details about what to expect from the market, particularly in reaction to yesterday's inflation numbers, let's bring in Bankole Odusanya, Chief Dealer with Polaris Bank, to tell us more about this inflation reading, and then what, of course, to expect next week when the MPC will be holding. It's nice to have you in the show,
Thank you,
Mr. Bankole Odusanya.
Yeah,
so now, you saw that reading, 22.22%, and, of course, it's the third consecutive monthly decline since that rebase inflation reading by the National Bureau of Statistics. So now, what do you make of it, and will this make the central bank MPC to cut interest rate from the 27.5%, which it currently is, and is high?
Yeah, thank you for having us. Inflation has dropped to 22.22%, being driven by food and core inflation. Of course, that's because we saw moderation 4 months earlier on petrol prices, but there was an uptick in June, so there's likely risk that going into half year we may see some level of uptick in petrol prices that then affects inflation. But basically, going into the rest of the year, interest rates are trending downwards, even without MPC's adjustment. And this is because at some point the Debt Management Office started trying to manage cost of debt issuance. Of course, revenue, expected and budgeted revenue isn't coming in as fast as projected. So we expect that at some point, even going into September, it's expected that there could be supplementary budget, and that simply just changes the game. But what we are expecting, the reading of market is that Debt Management Office issued fewer instruments in the last 1 month, June to July, to bring down rates from 19% of bonds. And we have NTBs, Nigerian Treasury bills, also at 16.3% for 1 year. They were at 19%, all of them as at March. So right now, dropping rates simply manages cost of debt issue, and then going into the rest of the year, they will borrow more, but at cheaper rate. So that's what is happening. With MPC, it's just a matter of time. If it does not happen, if that rate cut does not happen on July 22nd, it could happen in September. Personally, I feel the MPC would like to see where debt issuance and borrowing would go to. Because if there's going to be more borrowing and spending, it means that the risk of inflation remains inherent, and you do not want to jump the gun by cutting. But if there's to be a cut in July, probably to react to 3 months consecutive drop in inflation, probably there'll be a marginal cut from 1750 to maybe 17. So that's just our own expectation.
Okay, so now let's move away from the inflation. I think this just has to be our last question because we're out of time. Now, at the same time, next week, I'm sure we're going to be expecting that FGN bond auction for the month of July. So what would be your expectation under the government's borrowing plans for the third quarter? Okay, like I explained, the offer instruments are few. And that brings in the weight of demand, not just from PFAs, banks, individuals, and corporates who have funds to invest. With the direction of rates, a lot of people who had monies on deposits are rushing back to quickly grab high-yielding instruments. So at the last auction, we saw 17.8 on the longer end of the bond. That's 2032. We expect that bond to close at, say, 100 basis point lower, 16% levels. That's already trading in the secondary market at 16% level. So when the next auction drops to 16, what it simply means is that government raises more cash at cheaper rates. Okay, so that means that in line with the borrowing, government is not overshooting its targets. Not yet. What they have done is to taper issuance, manage the cost of issue. We think that by the last quarter, they will come to mop up a lot more, but at a cheaper rate. That's the target. That's what we feel is happening. Okay, Mr. Wankele, I think we'll keep our eyes out on how government turns out, how that auction will turn out, as well as keep an eye on the expectations from the Monetary Policy Committee of the MPC when they meet next week on Monday and Tuesday. Thank you so much for your time on the show. Thank you. That was Bankole Odusoya, Chief Dealer with Polaris Bank, giving us details of what to expect from next week from the Monetary Policy Committee meeting of the Central Bank of Nigeria when they meet next week, as well as the FGN July FGN bonds, which is expected to be auctioned next week. And so now let's talk about the Middle Eastern markets. We can see that the greens have it also for the Middle Eastern market, particularly those on the United Arab Emirates. And we see that, first of all, for the Dubai's main index, it advanced by this amount here. And this is about a 17.5-year high. And this is buoyed by financial shares. The banks have it. The banks are revving most of the stocks that we see around the world. Yesterday, we saw many of the banks around the U.S. bringing out their earnings numbers for the second quarter, and some of them for the half year. So that is making a positive imprint on the markets. You see also on the Abu Dhabi index up by more than 0.5%, 10,229.96. But for the Saudi Arabia Stock Exchange, it was a red. So this was the only laggard there. We see the impacts of Saudi Aramco's shares, which was down by 0.7%, making a negative imprint on there. And then markets almost below the 11,000 index level. And this market has dropped for about 8 consecutive sessions so far in the red. But for the Qatari Stock Exchange, we see it was up by 1.09% at intraday, and there's also poised for a positive close for the close of Thursday's trading session. So that's it for the Middle Eastern market. Now, but talking about the United States, where we see the stock futures there, for the stock futures, it's kind of a mixed picture there. We had it that the Dow Jones Industrial Average was initially in the red, but this is just ahead of the official opening bell by 2:30 Nigerian time. And this is coming after investors were weighing yesterday's comments, the latest comments in between for the feud between the U.S. President Donald Trump and the head of the country's central bank there, Jerome Powell. And this is coming after Jerome Powell said in a post yesterday that he will likely fire the U.S. Fed chief, and because there was a statement that said yes, he can fire him if there's a cause. But however, the stocks rebounded after the president downplayed that report and said he was not planning to do so, although that he does not rule out anything. So Trump has been kind of unpredictable on that, but the markets are keeping a keen eye on that, how that will come out in the future. So we count down, just as we're also assessing Donald Trump's upcoming 6 months in office, because it was more like a half-year scorecard for around the world, including the U.S. president's presidency at the world's biggest economy. Now, let's talk about the markets in Asia. We see, well, it's kind of a mixed picture there. The Nikkei has been able to come back into the green territory and just a shy away from the 40,000 level, which is about some 17 years high. That's about 39,901.19. For the Kospi index, it's also a green 0.19%, 3,192.29. For the Hang Seng, we saw the impact of sell pressure denting the market's performance for the close of Thursday's trading session. For the other markets, the Shanghai and the Nifty 50, that's India's benchmark indicator for 50 of the top stocks listed on the country's market there. The India's benchmark index, it was down by 0.12% for the close of Thursday's trading session. So just a mixed picture, but give and take, the greens have it for the close of Thursday's trading session, as well as intraday market numbers. So that's a wrap on the market. And of course, we're looking out for Nigeria's stock market to make another milestone.
Yeah, who knows? By now it's already hit 130,000 level. But it's good news to report and good news for the investors. Thank you so much, Anita.
Pleasure.
We're still staying with the market, but now we head to Berlin to see what European investors are doing. We have Chiponda Chimbelu to bring us up to date on that. Hi, Chip. How's the market looking?
Well, European shares are trading higher today. The Euro Stock 600 is actually up 0.6%. And Germany's DAX is also trading higher at around 0.8%. There is optimism over a potential trade deal between the EU and the US, at least today. And also, there have, of course, been positive earnings news. Swiss engineering multinational ABB posted a record quarterly order intake from April to June. So that it was in the second quarter. And that was, of course, driven in part by strong U.S. demand. That has helped push the shares of rival companies as well. So Germany's Siemens and France's Schneider Electric are also trading higher, and European industry shares are actually at a record high today. And of course, also worth pointing out that the markets are also heaving a sigh of relief at the news that U.S. President Trump denied that he is planning to fire Fed Reserve Chair Jerome Powell, at least for now. So that is also positive news, which has been helping markets today.
Well, I'm glad you added at least for now, Chip, because that's what we keep saying here too. At least for now, Jerome Powell can just have a little bit of relief. But turning to other stories, the European Commission has unveiled its ambitious proposal for its next economic plan. Could you give us details about that?
Well, this is a 1.98 euro budget, to be precise, and that amount is just over 1% of the EU's GDP. Now, this is the bloc's next long-term budget, so it's actually supposed to take effect in 2028 and run until 2034. Now, the budget proposal gives us a sense of where the EU's priorities lie and, of course, also how it plans for the bloc to remain competitive. And Brussels wants to have fewer fixed costs to be better able to respond to crises. Now, in the current budget, which runs until 2027, only around 4% of that is actually for unplanned costs. And that has made it very difficult for the European Commission to respond to crises like the COVID-19 pandemic or Russia's war in Ukraine. And major changes require that the EU Parliament and member states approve them. Now, of course, that can take very long, but before the European Commission's budget proposal and its reform take effect, it too will need to be approved by the European Parliament and the EU's 27 member states.
Yeah, so but the other countries on the bloc, what's their reaction? What are they saying about this?
Well, a German spokesperson said that the increase is unacceptable. So the increase in the budget to 2 trillion, or nearly 2 trillion euros is unacceptable because European governments are trying to adjust their own budgets because, of course, they're being forced to raise their defense spending. So other countries will probably agree with that. Now, the EU budget is funded by member state contributions based on their gross national income, value-added tax, and customs duties. And while the Commission does also want to give more power to national governments on how to spend EU funds, that is a change that is actually unwelcome in many regions beyond European capitals. And that is because regions receive funding for development directly from the EU as well. And they may end up losing out if their national governments have other priorities. And the EU Parliament, too, isn't keen on the proposed changes, and that's because the bloc's legislative arm doesn't want to lose influence on spending. So this long-term budget is actually set for a bumpy ride for the next 2 years, and it is highly unlikely that it will be approved and it's implemented in its current form. So we are set for a couple of debates in the EU regarding this budget.
All right, last Chip. So it does look like there'll be more conversations on that, because I don't hear who is in support of this. But thank you so much for giving us updates and of this. And we'll keep our eyes on the budget and the conversations around it. Let's come back to Africa, where South African Reserve Bank governor is saying that although inflation has eased across G20 countries, it still remains above desired level. And so he notes that governments and companies are now borrowing approximately $10 trillion more per year than they did before the COVID-19 pandemic. He made these remarks at the third finance ministers and central bank governors meeting that's currently taking place in KwaZulu-Natal. And the gathering is being held under the theme Solidarity, Equality, and Sustainability.
At the same time, the Bank for International Settlements analysis shows that credit growth is now driven more by lending to governments than to private sector, reflecting persistently high deficits and fiscal pressures. This evolving landscape raises the stakes on the interaction between fiscal and monetary policy, especially in avoiding fiscal dominance and maintaining financial stability. With fiscal space constrained and growth weak, our fiscal authorities will face challenges in rebuilding much-needed fiscal buffers in many countries. Fiscal risks continue to drive up long-term yields and debt service costs. Preserving macroeconomic stability while supporting inclusive and sustainable growth, therefore, remains crucial. Climate-related risks are also increasingly shaping fiscal positions and threatening financial stability. As such, adaptation and mitigation are no longer esoteric environmental concerns. They are economic imperatives.
We move over to Ghana, where, as we speak, the Bank of Ghana has announced that it will hold an emergency monetary policy committee meeting today. According to the notice, the meeting will review developments in the economy over the past 2 months, and the notice also disclosed that a policy decision of the committee will be announced on Friday that's July 20, after the meeting. The policy rate currently stands at 28%, and there's been a strong push by businesses and industry watchers for the policy rate to be reduced. This is due to the fact that inflation has witnessed a significant reduction over the past months since December last year. Inflation is currently at 13.7%. But still in Ghana, producer price inflation for June 2025 has fallen sharply to 5.9%. That's the lowest year-on-year rate since November 2023. This is according to the Ghana Statistical Service, beg your pardon. The drop marks a 4.2% point decline from the 10.1 that was recorded in May 2025, and it represents the 5th consecutive month of easing producer inflation. It also reflects a dramatic 19.7 percentage point fall from the 25.6% that was registered in June 2024. Let's leave away from Ghana and head to Ethiopia, where the International Monetary Fund is warning Ethiopia that economic policies unveiled as part of the $3.4 billion loan agreement face challenges that could complicate debt restructuring efforts. The IMF, in a report, praised the government for implementing a series of changes, including tax reforms, subsidy cuts, and liberalizing the foreign exchange market. Foreign aid to Ethiopia has dropped to under 4% of the GDP from 12% a decade ago, with further cuts expected as international donors scale back Ethiopia turned to the IMF after it defaulted in December 2023. It agreed terms on principle with official creditors this year and is seeking comparable debt relief from bond holders. Let's head to Kenya, where the government has endorsed a new national digital token that claims to be built to empower a new generation of citizens. The Kenya Digital Token, the KDT, that's what it's called, is launched recently as a civic token designed for community engagement, celebrating Kenya's national identity, inspiring technological progress, and inviting global participation in Kenya's future. Despite its nationalistic undertones, KDT was developed by a private entity without direct links to the government, and its white paper states that the token is non-political in nature and is not affiliated or supported by the Kenyan government. The Energy and Petroleum Regulatory Authority has raised margins for oil marketing companies in the July-August cycle. That's in Kenya. The retail cost of petrol has reached its highest level since September 2024 after the Energy and Petroleum Regulatory Authority raised the margins for oil marketing companies by 2.15 Kenyan shilling per litre. The regulator increased the margins for the second time in 4 months, which raised the total price of 3 regulated items by 5 Kenyan shilling per litre. In the July-August period, petroleum companies will make 17.39 per litre of Kenyan shilling of super petrol, and that's up from 12.39. That's what it was in February. Diesel margins also increased from 12.38 per litre in February to 17.31 per litre in July, while all marketers will earn 17.28 per litre for kerosene, and that's up from 12.36 in February. All right, now let's head to the crypto space now and see what Laddie Williams has for us from that. Laddie.
Right, what does Laddie have? Maybe not much, just some news here.
not in a crypto week.
Yeah, well, there's so much in the crypto week at this point. And see what Kenya is doing there on Solana's blockchain. Yeah. That's quite bullish, you know, for Solana. Well, let's look at the headlines, some of the headlines. There we see Coinbase, they unveiled Base app at this point. This app's supposed to have everything from social media, payments, a wallet, you know, at this point. They're calling it a super app. So they've launched that app. Then we see $528 million in Ethereum that has been sold at this point. 2 significant Ethereum whales. They've unloaded 178,000 Ethereum in total. So definitely, even we're seeing that rally with Ethereum. We're seeing some whales there selling. That's some selling activity. $528 million. Then some data out today. We see 36% of Gen Zs are spending crypto on daily purchases. We know there's been a lot of talk about stable coins at this point and how that's solving cross-border payment issues. But we see some Gen Zs there using it for daily spend. Let's look at what the data is showing us there, what they're spending on. We're seeing Gen Zs are spending crypto on gaming. 39% of them are using crypto to pay for gaming activities, while millennials are doing 35%, Gen X 29%. Then for daily purchases, Gen Zs are spending doing about 36%, more than the millennials and Gen X. Then for travel, let's see who's leading there. 40% Gen X is using crypto to pay for travel, while the millennials are doing about 36%. That's data from BitGet Wallet, their on-chain report there. So we see the Gen Zs there. They love their gaming, so they're using that, you know, they're using cryptocurrencies to pay for most of those services. Let's bring in Rume Ofi now, the financial market analyst. Hello, Rume.
Hello, Laddie.
Yeah, great to have you, Rume. I know you and I were Gen Zs, you know, at this point. Don't know about INI, but you and I are Gen Zs. Talk to me about this trend we're seeing from this report there. I thought crypto was just for investments, but it seems some are using it for transactional purposes.
Yeah, so it's a different ballgame entirely right now because the money is changing, and we need to understand that the idea of paper money is not the way we will be doing all of this forever. It's actually evolving right now. And earlier, a lot of people, government agencies, and also regulators understand that the idea of paper money going to digital is here to stay, the better for us to get proper regulation. It's an amazing stuff. The younger people won't like to carry cash around. They will like to pay using stablecoin, be the one denominated with the dollar or other currency. But I prefer that in this our climb, in order to make our currency really strong, if gamers are going to be doing stuff, they should be doing stable coins that's denominated in Naira so that we can as well grow the Naira. But it's a very good initiative. A lot of our population in Nigeria is more ahead, about more than 50%, about 60% age 18 to 35, thereabout. It only means that we have more people that are also going to be on this Jay-Z millennial pedestal, and it's going to help to build products, grow products from Africa and Nigeria that are going to be paying with stablecoin, or people earning in stablecoin rather than the Naira or other fiat.
So do you see this a sign of what's to come? Do you think people are going to move away from speculation, when it comes to cryptocurrencies, and start using it for day-to-day payments? And do you think the blockchains can actually handle some of that transaction volume?
Yes, it's already happening, Ladi. It's already happening right now, because the truth is that a couple of countries, the other day we saw in the UAE, where if you have certain amount of money, I think about $100,000 or more, you'll be given citizenship. Or also, we also saw that for the Emirate company, the flight company, where you can use cryptocurrency to make payment. Maybe that actually added to the data on travel. It is actually happening right now, and a lot is going to change. A lot is going to change. Right now is the time to learn. Right now is the time to have the right regulation. Right now is the right time to take position for those that are creating various careers around that, or adding values around all of that. It is already happening. Before now, we've been talking about it on this platform, that it's going to happen 2-3 years ago, and it's right here. That is why the US is actually making sure that the US dollar stable coin is dominating the dollar hegemony, where the dollar is ahead, the dollar is at the top. That is why, if you figure out right now, all of the laws that have been passed from the US Senate and the House for this week is targeted at making the US dollar-backed stable coin to be in a way to help the US to position themselves as the number one. So it now behooves on other countries in Africa to be able to do same. So, for example, you have your own stable coin, or you have cryptocurrency. People now can build products where you can use cryptocurrency to pay, then it translates to your own indigenous currency, which makes a lot of sense. So the future of money is digital, Adi, and it's so exciting that we are here to see from the angle of being strangulation to where the reality is staring us at the face. And if anyone is not taking position, most especially government, they're going to lose out on all of these opportunities.
All right, so, talking about the U.S., they're trying to lead with their stable coin. What do you think Nigeria should be doing at this point with a CNGN? Maybe we can lead Africa, with a digital currency?
Yeah, so Nigeria actually took a very bold step, from the era of CBDC, which actually collapsed in the last administration. Kudos to this one, making sure that they are living to their expectation of enabling digital asset, blockchain, and cryptocurrency to power the economy. Like they said, I know a lot could also be done. And a few years past now in this administration, I think we need to have some deliberate policy making process to also license more platforms by the authorities, so that we can have more people looking at our industry as our space here as a crypto-friendly ecosystem. Because in the past administration, it was very hostile in all of the issues that came up with the Binance and a couple of others. A couple of persons were arrested, detained because they are involved in this industry. So we need to have a very, very flexible ecosystem that attracts investors from different parts of the world so that we can lead Africa. Nigeria deliberately needs to lead Africa in this innovation.
Right.
Funny enough, VCs are going to Kenya and a couple of places, which means that we're not doing our job well. And I think we need to keep talking about it so that regulators and government, also the National Assembly could look into all of these and make sure it works. Stablecoin for us that is going on now, backed by the Naira, is fantastic, but we need to push it all together to make sure that other parts of Africa learn from us.
All right. Thank you so much. Romeo, it was great getting your perspective. I'll catch you again next time. Thank you.
Thank you very much, Larry. Always a pleasure.
So, yes, stable coins, stability, Gen Zs, spending, crypto at this point. I know you want to be like us, the Gen Zs, spending cryptocurrency.
You wish. All right, Ladi, thank you. Well, that's it on the program. Thank you so much for being a part of Business Incorporated. Interesting data that Lady Robert. I'll give him an answer next time, yeah? It's fine. Well, thank you so much for being a part. I'll see you tomorrow. God's grace. Bye-bye. I'm Ini John Mekwa.